Good afternoon, everybody. How's it hanging? What's up, Dave? Hello, Joanna. What's going on, Eddie and Rose Petals? What's up, Ben? Bryant? Fernando? Hope everybody had a great weekend. What's up, Bandit? Dalakir? How is everybody doing? All right. Here's a link to the YouTube if anybody needs that. I'm going to get it started. I am an associate member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA SIPC. All of my trades are placed through T3 Trading Group, and you should carefully consider whether trading is suitable for you in light of your own financial condition. Position disclosure. I got into Microsoft today. I kept like a very little bit of AMC over the weekend, like a very little bit against me, and I added a lot today, so I'm a lot heavier tonight than I was yesterday. That's just an extension trade on the daily chart that I'm looking for there. So we'll monitor that. We'll see how it plays out, and everything else is the same. I think I'm in 19 positions. All right, so let's go over to the charts. Let's talk about today's trading session, our game plan, how things worked out. So we finished here with the S&P up about 0.6%, the NASDAQ up about 1.2%, and the IWM is up about 0.25%. So relative weakness from the Russell with the market here. So we had a really big gap up this morning. Let's actually start with the daily chart, and then we'll take a look at the 5-minute charts for these indices. We had a really big gap up this morning. So just to recap, and I recapped really briefly in the morning meeting today, but we'll do it again right now. Market peaked out in July. We called that perfectly, by the way. We even called the percentage pullback to 435. 5% pullback is what we were looking for there, with that failed breakout up here, which is a lot of data supporting a pullback, really kind of starting on July 27th. We leaked out and lost this key 444 support level in early August that we were trying to hold. That led to a real washout of selling. 3 big down days in a row, followed by a day 4 gap down. The day 4 gap down was options X, so it made it a little bit of a tricky session, but this was our biggest conviction buy day of that entire month of August, which in hindsight was pretty good, yet a counter trend trade, right? So really just looking for an extension snapback. We got that. We got great follow through on it. And then that looked like it was ending with the NVIDIA sell-off day on August 24th. So there's negative Maribozu here in the S&P on August 24th. That was the day after NVIDIA had reported. It reported the night before. So this is really the trading session in which NVIDIA affected the market. NVIDIA sold off that day, and they kind of just sold everything. It was a risk-off day, but it created a higher low. There was a push through here that is one of the ways that we discussed that a negative Maribozu can get negated, right? Either through an inside and up, or when they break that previous day's low, snap it back up. So great little higher low came into the market on August 25th. That was confirmed on August 29th, which was also a really important trading session. Why did I say it was confirmed on August 29th? Because that's the day that the negative Maribozu was negated. And if you've ever watched my candlestick class, you would know that the negation of a negative or positive Maribozu is always going to be really important in the market. A Maribozu candlestick is a bar that has little to no wicks and a large body, and especially when it's represented by higher volume, it just becomes a really important candle, because it pretty much represents a day on a negative candle where sellers were in control for the entirety of that day, and on a positive candle where buyers are in control for the entirety of that day. So the negation of one of those important candles is really important. So on the 24th, wide-ranging, engulfing negative Maribozu, yet through a tail snapback, which again is one of the patterns in which that can is decently high probability of the lower probability situation of the candle actually getting negated. We got this snapback higher, And then the confirmation was on the JOLTS day of August 29th, when we actually broke above that high and cleared above that high with a positive Maribozu. So now the bulls were in short-term control. They're out of the penalty box. You know, we were doing our analysis of multiple time frames, which I think is a really important part of analyzing the market. We know our large time frame is bullish, our intermediate time frame at this point is neutral, and our small time frame, which is much more subject to change because it's on a smaller time frame, had gone from being very clearly and obviously bullish in May, June, July to bearish in August, kind of getting back to neutral territory and then flipping positive with that important JOLTS day and that positive Maribozu on August 29th. Off that move, we got extended to the upside, almost to the extreme extension. I remember on one of these 2 days not getting filled in a TQQQ short by 1 penny, because I'm always trying to be really conservative on my counter trend stuff. I really want the large extension, or, you know, like the counter trend trade to the long side on August 18th was great because we had almost $10 of downside in the SPYs and the Qs. Not quite. 10 would have been ideal. Not quite. But we had, you know, the oscillator giving us a buy signal. We were, you know, day 3 in short-term tactical giving us a buy signal, and it was a day 4 gap down. Like, that's exactly where you want to come in and buy. I find that if you're doing counter trend trading like that, the key really is patience. Pat H here, Patrick Kaw, is a master of that patience, much better than me in a lot of ways. But I'm able to be pretty good as well on the big picture, I think, of just being a little bit more patient and really waiting for that counter trend to come in. So this was perfect. And on the upside, it was the flip here, the flip side. We're just about getting to $10 worth of extension. We had like 5 up days in a row. And again, all you're looking for is the pullback, right? All you're looking for, even with this bounce back off the low, you're not looking for a full reversal when you're buying on August 18th. You're not looking for the SPYs to get to 454, at least not on this, based on a small time frame analysis. What you're looking for is a bounce back into this equilibrium area, and then you want to have rules in place that can enable you to hold stock in case that retracement becomes a reversal. And those rules take into your thought process that you need that higher low to actually come in. So that was perfect. So, you know, now same deal here to the upside. It's like, all right, you know, at a minimum, we want to be lightening up on our longs. If you were aggressive, I remember saying if you're aggressive, you can really go after the shorts here as well on August 31st, September 1st. I was a little bit more patient. I didn't quite get stock. But all you're really looking for is a snapback to equilibrium. And then what do you want to see in equilibrium? Whether you're long or short. If you're bullish and you're trying to trend follow and you're trying to have this short time frame trend give upside continuation in the direction of the big time frame, this is where you want to see a pivot come in. Ideally, you would want to see no more than 50% of this positive Maribozu get lost. You want to see this moving average area, the space between the 8 and 21 EMA. I consider that to be technical equilibrium for any stock or any chart that you're looking at. You know, you want to see that hold with a pivot low, and then you want that pivot low to work its way up. This pullback here was really tricky last week because the pullback was potentially deeper than it, air quotes, you know, should have been. It was more than 50% of the positive Maribozu, but it held lows, right? So remember, when we negated the negative Maribozu from the 24th, when we did that on the 29th, I said that was the confirming day, right? Because it confirmed for the bulls by the negation of this negative Maribozu. Well, the opposite nearly took place if we would have lost August 29th's low, the positive Maribozu, on a closing basis. We didn't. So I would argue that this pullback was uncomfortably deep, but not necessarily a broken chart yet. We held on by a thread. I think that was literally the expression or whatever that I was using there. We held on by a thread. We've created this pivot. And now, you know, Friday was a little bit boring. Today we had a strong gap up and a strong close, a little bit of a continuation doji. And we want to see, even if this pivot was deep, if it can lead to those new highs. And then what we also want to see is if the other indices, the Qs and the IWM especially, are confirming that. And the Qs is where the strength has been. I mean, this is where the strength has been from the beginning. I remember the Qs broke out first in May. Rotation back into big cap tech. No surprise. It seems like that's where it always comes from. That was added to when NVIDIA first reported that earnings report where, AI became this big thing. And in this pullback, the Qs are much healthier. They more or less held 50% of that Jolt's positive Maribozu. Much less work as well for the Qs to create this higher low, higher high pattern. But the flip side is the IWM is just awful, and I think that the IWM is the most important index. It's consistently been a leader over the course of the last year and a half. It's much more common for a weak IWM to pull down the S&P and the NASDAQ than the opposite to occur, though we have instances over the course of the last couple of years here of both situations occurring. It's always really concerning when the IWM is weaker. The IWM represents more of your average stock. It's a good proxy for market breadth, so we don't want to see this weak. And the IWM, unlike the SPYs and the Qs, did lose that Jolt stay low. So that was absolutely a concern. And again, it started really with this day here on September 5th, where the Russell was down over 2% and the NASDAQ actually still managed to finish positive. And what we've been looking for the last couple of trading sessions when we had a little bit of extension on the downside is like, all right, well, the IWM has definitely pulled back too much. It's showing a real failure of that short-term uptrend, going back to multiple time frame analysis on our indices, which is such an important layer of probability for how you want to position yourself in the market. The IWM is failing, whereas the SPYs and Qs are still intact. But what's going to happen, right? I've got two indices, especially if you want to look at the NASDAQ and the IWM, because it's where the largest extremes are. I've got two indices giving me two pieces of information. I got the NASDAQ saying me, full steam ahead, we're looking great, we're bullish on the big time frame, neutral on the intermediate time frame, and bullish on the small time frame, so that's not too bad. And I've got the IWM, barely holding on to this 200-day, which also, by the way, shows weakness. Just how close the Russell still is to its 200-day versus how close the Qs and the SPYs are to their 200-day. This also, is representing kind of your average stock that's out there. So, what I'm trying to see is how this market resolves itself at this point. Will the Qs stay strong and eventually this IWM improves? It gets back above. I've been looking at 185 the last couple of trading sessions, but then also gets back above these moving averages. I think getting back above 185, which the IWM failed to do on a closing basis today, kind of gets you out of the woods, so to speak. But you really need to get above 188, I think, in the IWM for this index to start looking a little bit more bullish again. And then the real confirmation is a break of the last pivot high, which is from September 1st, which is $192. It's a lot of work that needs to be done. So can the SPYs and Qs hold in and this IWM eventually resolve itself up? Or is this IWM going to stay relatively weak, eventually lose its 200-day, eventually lose 183, and eventually at some point these SPYs and Qs begin to roll over? I obviously don't have the answer to that. I'm certainly concerned a bit. I'm always concerned when the IWM is leading the weakness, and I'm trying to keep myself from being too aggressive to the long side. Or it could just be that we just don't want to be in a trending market, which we'll see. Can this low from 2 trading sessions ago actually yield a new high? In which case, you've got a very clear short-term pattern of higher highs and higher lows, starting with the first low on August 18th. Then you've got a pivot high on August 24th, pivot low on August 25th, pivot high on September 1st, pivot low on September 7th, leading to a new pivot high. That's very clearly a pattern of higher highs and higher lows that gives continuation. Or is it possible that the real resolution to this difference between the IWM and the Qs is no resolution? And what I mean by that is that we just get broadly sideways range-bound action. And again, we're always wait and see mode on that. We analyze the technicals and our trends on a day-to-day basis here to get our updates from what the market is telling us in terms of an analysis of supply and demand, which is kind of all we can go on. We like to couple that analysis of supply and demand with an understanding of market dynamics and an understanding to some degree of fundamentals. But I always say that I always think that those other things, market dynamics and fundamentals are important for building out a thesis and understanding a big picture for the market. Your technicals really have to be first and foremost. But I still think that when you actually are analyzing the technicals, which again it's still a little bit wait and see, and you look at it in conjunction with market dynamics, which are a little bit more, let's call it neutral right now, and the fundamentals, which to some degree are a little bit expensive, but that doesn't necessarily matter, as we've certainly seen in the past. And you combine that also with seasonality here, September being the weakest, one of the weakest, or the weakest month of the year, and I always take seasonality with a grain of salt, but it's something to pay attention to. I think there's just a lot of information here that says, hey, we could actually just be sideways for September, maybe even sideways roughly for October, and then we'll see if we can actually break out in November, December. That would make a lot of sense to me. It would allow the 200-day, which at the end of July, the 200-day had gotten very stretched. If you just look at it historically, from where the market was actually trading for the S&P and the Qs, it allows that 200-day to continue to keep up or catch up, and it resolves the Qs and the IWM, the deviance between the two, in a not so satisfying way, to be honest, which is that my analysis of the relative strength in the Qs and the relative weakness in the IWM, and trying to figure out, which one is the winner and pulls the other one up or down, actually doesn't matter, because we're just in a sideways market, and in that sideways market, one day the Qs will be strong, one day the IWM will be strong, the SPYs will stay in the middle, and then come November, if this market wants to really break up and break higher, then it'll pull all three indices with it, and we can kind of continue our trend analysis from there. So I still think that's the highest probability situation, but for the moment, if I'm analyzing the SPYs, they're barely holding in, but they are holding in on their short-term bullishness. Their long-term bullishness is very much intact still, and that intermediate time frame, though, which is important, is trendless. So we'll see how that plays out. And range-bound markets tend to not be the funnest market, right? We want the nice clean trend up. We want that May, June, July price action. That May, June, July price action, when you get it, you got to make sure you take advantage of it, because it always seems like everything works. You buy the dip, it works. You buy the breakout, it works. Or even a heavy sell-off, right? I still think that there is a lower probability situation of a very hard, very fast sell-off. It is not my base case scenario, but it is something that I'm keeping in the back of my head, and a lot of that is still market dynamics based, with just kind of an understanding of the VIX and the systematic funds, which I know did deleverage to some degree in August, but the way the options market is working and the zero DTE stuff, if anybody watched that Jim Carson video that was sent over to me from Bill and we posted in the VTF last week, it gives you, I think, a good understanding of some of the stuff that we're talking about. But if the volatility really increases and the VIX increases, the same way that we saw, there was really interesting action, particularly in these 3 days, and it just shows you how markets work in feedback cycles. These 3 days in August, before we had our big gap down, I think we were dealing with negative gamma, which again just broadly means that your buying leads to more buying, selling leads to more selling, and overall the outcomes in the market can be much more spread out in terms of what happens there. But it was really interesting to see how the same zero DTE stuff that we had spoken a lot about in April and May, and then the beginning of this rally, where we would oftentimes, especially in that range in April and May, see sell-offs in the first half of the day that gave these intraday V-bottom reversals, and then we would close well, and on a close-to-close basis, we would kind of end up nowhere, staying in our range. That same dynamic led from selling to more selling on those days. And I think that that's just actually a microcosm of how bad it can be. So in the same way that we have seen 0 DTE almost stem and slow down volatility in a lot of ways, and potentially keep the VIX like almost artificially low, I think in that same way, it has the capacity to enable this market to move down significantly faster than we might even be used to from our other bearish periods that we've seen. So it's something I'm certainly keeping in the back of my mind, though for the moment my base case is, we'll call it bullish neutral. I really think range bound, but I'm watching the fact that these SPYs are still technically in their short-term uptrend as well as their long-term uptrend, and I would not be surprised if they resolved to the upside, but the IWM is a really big concern. And then the Russell was just a huge disappointment again today. So breaking down to the small time frame analysis of the market. So we had a really large gap up this morning. And large gap ups, especially if they're common or area gaps, which is what this was, have high probability of being filled. I want to like put an asterisk on that. When we say gap fill, that means, it implies, and it specifically means a trade down to yesterday's close. It doesn't always have to be that way. If the market is strong, which the S&P was decently strong today and the Qs were decently strong, sometimes that just means a technical pullback to equilibrium. And again, what is equilibrium? I judge equilibrium on any time frame that I'm looking at to be broadly the space between the 8 and 21 EMA on that time frame. So what large gaps do, large gaps up or large gaps down, is they make small time frame extension off the open. So just using today as an example, the SPYs today opened at 448.24, and the ADMA was at 445.85 at the 9:30 bar, at the opening bar. So you had $2.50 approximately of upside extension in the SPYs on a 5-minute chart. That's a lot of an extension for a 5-minute chart. For reference, on a daily chart, we say that $10 plus is extreme, right? So we're talking about a 5-minute chart, and obviously it being a 5-minute chart and the way that moving averages work, that will get satisfied relatively quickly. Large gaps, we usually see equilibrium catch up happening in the 9:45 to 10 a.m. period. But this type of gap that we're having, which is a common gap to the upside, tends to mean more selling than buying. More profit taking wants to come in than new buying. And that's even what I was talking about in the morning meeting. It's like if you've got longs on from Thursday, Friday last week, you're getting gifted with this big gap up. This is a great opportunity just to put a little bit of money in your pocket, and you could potentially rebuy that stock on the pullback to equilibrium or when the ADMA actually catches up to price. And who wants to come in? If you didn't buy on Thursday and Friday, are you chasing this gap up this morning? No. So this type of gap usually leads to more selling than buying at the open, which means a pullback. And if it wants to be really strong, once the equilibrium catches up, then sometimes you get that pivot and you get continuation. And that's exactly what we saw. We saw the market gap up, volatility on the first 5-minute. They tried to push it a little bit, but they couldn't. And then just a total failure and pull back to this equilibrium area. So what I'm analyzing in that opening price action, I love trading the open. My favorite time of the day actually to trade is really the first 5 minutes of the day. It's my favorite time to execute anything new, though the first hour is really when I'm most active with my trading. But I also have to recognize that, into this type of gap, I really didn't want to be shorting this gap. There's no signal for me to short. We're not extended enough on the daily chart. We just did, our large time frame analysis, and nowhere did I say anything about anything being bearish except for maybe the IWM, and I would still argue that it's probably more neutral than bearish when it comes to the Russell. So I really don't want to be shorting. I'm not in a bear market. I'm not in a bearish market. I'm not in a market that's really downtrending on any time frame, on any exchange, or any index. And I'm not extended enough to do the counter trend shorts either. But I'm definitely not chasing this gap up this morning. So what do I want to do? I want to be patient. I want to wait for the setups and book profit, if anything, into this up move. And that's what I was saying in the morning meeting. First of all, I'm selling into this gap up. I'll look at some names that are in play. I'll look for relative strength and relative weakness. But really, I need to wait for equilibrium catch-up. And I want to analyze that equilibrium catch-up. If you get, and this wasn't that bad, I didn't think, but sometimes you get that gap up and you just get, first bar is brutal red bar, second bar is brutal red bar. By the third bar, you've already crossed through the ADMA. That's usually like a really bad signal. Momentum selling is different than profit taking selling, and you can see that in the chart. But that's one situation that can happen. Another situation that can happen, which I actually think is most bullish, is for the market to just go sideways. And if it's sideways, then you're looking at 30, 45 minutes before the ADMA catches up to price. That's great. That shows that there's not a lot of sellers coming in. Buyers are kind of holding firm. And once equilibrium catches up, a lot of times that's when you get that next wave of buying that actually comes in to push the market. The other situation that we see, which is pretty common, is similar to what we saw today, where there's no real buyers that want to come in and chase this gap. There's profit takers that are coming in and selling into this gap, like us, for long from last week, and that pulls this market back. But it's just profit taking selling. So that dies out after 15 to 30 minutes, and it usually dies out in conjunction with the moving averages catching up. And then as those moving averages catch up, you get buying that comes into the market of market participants who are like, man, I should have bought on Thursday and Friday. I'm not chasing the gap up this morning, but look, I just got this little dip that I can come in and actually get some prices that I'm interested in, and then see if you can get that pivot, and then see if that pivot can actually lead to new highs. That's what I felt was the highest probability situation today. And it didn't really work out. We pulled back too deep. This turned into a higher low. We broke that opening pivot low for sure by 11 a.m. And it just, the market action didn't look right. The IWM was kind of all over the map, to be honest. I was really excited in the beginning of the day when the IWM broke highs in the second 5-minute bar of the day while the Qs and the SPYs were selling. I was like, this is great, actually. IWM breaking highs, Qs selling. That actually helps because I'm always thinking about the big picture as I'm looking at the small picture. That helps satisfy this difference that we're seeing in the Qs and the IWM, right? So if the Qs are really relatively strong on the daily chart and the IWM is a concern, I have no problem with the Qs giving me this second bar of the day and the IWM giving me this second bar of the day, because it helps to satisfy that difference that we're seeing on the daily chart for the SPYs and the Qs. That's great. And then just as I'm getting excited, there is zero follow-through for the IWM. We lost 185. I mentioned in the morning meeting I didn't want to lose 185, but that it also could be a little bit of a loose level just because we were opening up so extended. Lost that. Not the end of the world, but I need to recapture it really quickly. And I was thrown in the towel with this IWM at the 955 candle. Again, the pullback was just too deep. We overcorrected on the 5-minute chart. I get it. It was really just kind of a 15-minute correction. But this was now looking more like momentum selling that I described earlier, as opposed to just some profit-taking selling, which isn't the end of the world. It still shows you that bulls can be there. And I was really kind of thrown in the towel on this market. Now I'm like, all right, the IWM, which was being strong, is showing me that it's failing. The SPYs, they can't really rally. They created this lower high. Things are not going well. The Qs, which actually were showing relative strength, and this is my one real failed trade of the day. I tried the Qs long versus this low off that same concept. Now the IWM was failing. The Qs were holding a little bit better. Amazon and Google were super strong. Obviously, Semis and Apple were weak. But I got this nice little pivot here. I'm like, all right, let me go long versus this low. I never got any risk covered, so I just took a straight loss on that. It was not with a lot of size, not the end of the world. And this market just looked shot to me. And I started to think that the highest probability situation was just sideways chop for the rest of the day. Really, what the IWM kind of ended up doing, though it did it towards weakness. And then out of nowhere, the Qs just got super strong, broke the opening high, had this random midday 12:30, 1 o'clock kind of trend higher. And this market action at the end of the day, if anything, it just furthered the difference, that spread between the QQQ outperformance and the IWM underperformance, which is really not what I want to see. And it, further leaves just a big question mark when you're trying to analyze this market on multiple time frames by using multiple indices to see what the highest probability situation is of market continuation or lack thereof. I do not like that this IWM couldn't hold 185 on a closing basis. I do not like that the IWM closed on lows. I do not like that the IWM fell at the 80 MA on the daily chart. But then I look at the Qs and I'm like, Qs are giving continuation off the pivot low from Thursday. They still held that key positive Maribozu low. These look like they're, a day away potentially from, breaking the September 1st high, which continues a short-term uptrend. And, the bottom line here is I'm still left with a little bit of a question mark on if I'm trying to analyze these indices on multiple time frames and look for the same message to come from everywhere across the board. I'm just not getting it. So that's kind of where we're at. So I want to continue to focus on what's in play and bigger extension trades and relative strength and relative weakness and things like that for just little trades until we get broader clarity. But I also think that difference between the Qs and the IWM, if you go back to the SPYs, is just still leading to the highest probability situation of us just being in a range bound, big picture range bound, sideways or choppy or market for kind of the foreseeable future, which could change on a dime based on what CPI looks like on Wednesday. So you can always get a macro event that changes the technical picture very, very quickly. So we'll see if that's the case. But for the moment, it's hard to really have day in, day out conviction. I mean, we can analyze these individual sectors. Another thing that I thought was interesting is that the data is just kind of showing that even if, as the indices are not doing anything, you're getting really large outperformance, underperformance from individual sectors. And I do think that breeds opportunity, whether it's big tech that was going or it's these energy names which gave the pullback that I was saying we shouldn't buy because XLE was just a little bit too extended on the daily chart this morning, even though it's been a great sector to focus on for the last week or so off that strength performance that it's had. We could take our trades day by day and look for that relative strength and relative weakness and look for names that are in play and see what can trigger. And there was some decent stuff out there. I never traded Tesla at all. I know some folks were talking about trying to fade the clown grade, and I hope I made it pretty abundantly clear in the morning meeting that I would not recommend shorting Tesla today, even though I also thought that the upgrade was somewhat ridiculous. The technicals were just looking really bullish on the break of that daily chart consolidation to the upside. It sounds like some of you guys caught this inside 5 and up for some momentum in the beginning of the day, so it's fantastic. I hope that you guys implemented good trailing techniques because it really looks like you could have been in Tesla just about all day and caught this entire move, even if you were just in off this fourth candle of the day on the 5-minute chart. I traded this AMC. I never got any upside follow-through that I was looking for on it. I kept a very little bit over the weekend. I started buying some pre-market at a not ideal price, but it was light. And I wanted to see if we can get an RDR. I agreed with Pat when he was on the radio, even when we broke yesterday's low. I ideally wanted a flush of 7 to get much heavier, and I didn't get that. So I did add some stock, and I'm keeping a decent position overnight. I do not believe in AMC. I talked about it in the morning meeting. Do not believe in this company. It's just a trade. Stock split adjusted at this point, trading at 73 cents, which that even undershoots. If anyone remembers, when AMC was split adjusted like $60, $70, I was saying my price target was like, I don't know, 10 or 5 or something like that is where I thought it really belonged. And this was my best short of the year in 2021. But it's even overshooting my downside target on AMC, which at least part of that is just disaster management decisions on AMC and Ape, and then these secondaries and everything that they're doing even at these prices. But just looking for a snapback trade on that. I traded a bunch of it. I ended up, positive by an okay amount on it, but I still want to see if I can get a pop to the $10 area on AMC. But again, that's just a trade, but it was a focus for me. Palantir was another call out that I had for the morning meeting, and this was also a focus for me. Great opening strength, traded really well. I wanted to see if it could clear 1570. Got strength in the beginning of the day, cleared 1570, barely closed above it. Would have liked a little bit of a better close, but we'll continue to monitor this one if we can get continuation. It sounds like a bunch of you guys were involved in this one with me early on in the day, and that was also a solid trade. So some good stuff. Also made a few dollars in Unity and Pinterest today and DocuSign today, just little trades. But broadly staying somewhat conservative. I do still have a pretty good amount of long exposure, big picture, on this market while this uptrend still is intact. But I'm trying not to be overly aggressive right now intraday until we get a little bit more clarity from this market. So that's all I got. I felt it would be a good idea to just do a little bit of a bigger picture review of the market and kind of draw out some lessons on how to view the market on a day-to-day basis and some of the things that people want to be thinking about and looking for as they understand the keys to understanding market movement. It's technicals, it's market dynamics, it's to some degree fundamentals, and within technicals, you've got all your layers of probability, and we want to analyze those layers of probability. We spend a lot of time analyzing one of the most important ones, which is the market itself, right? And within that, you have time frame continuity. And you can look at these different indices and you can look for relative strength and relative weakness, but you also want to see that they're actually telling you the same story as you look for relative strength and relative weakness. And we want to look at that in conjunction with extension, because extension tells us when we shouldn't be buying. Even when you think the market should go higher, you say, okay, this gap up is too big, or this daily chart move is too big. I think we're going higher, but I can't buy here. I should be booking profit here, and I could look to coming in and buy at lower prices. So those are just the fundamental core units. I don't know what term I'm looking for, that you need to learn to pay attention to, because again, I just think it's worth repeating because it's a big takeaway. Like when I'm analyzing a 5-minute chart after the market opened, I've already studied the absolute heck out of the daily chart, and I do it every day. I know exactly what those daily charts look like, to the point where I don't even have to have it up on my screens necessarily moment to moment. But I'm constantly thinking about, what does the small time frame action actually do to the big time frame? And that's really a lot of how I want to position myself. Like I said, on the second 5-minute bar of the day, even though it turned out to just be a fake out, seeing these Qs sell the way that they're selling, but the IWM make highs, I'm immediately like, all right, well, what are the repercussions of that? What are the repercussions of what these daily charts are going to look like? What are the repercussions of that multiple time frame analysis, of that multiple index analysis? And what does it mean for me, for my positioning, for my execution? What do I want to be trading? What do I want to be going after? It all comes from this big picture thought process that we break down into the smaller picture and analyze on a 5-minute by 5-minute basis, a moment by moment basis, to see how that picture of supply and demand on multiple time frames is evolving, figure out how we want to position ourselves from a risk reward and probability perspective, and that's how you make money. You combine that again with risk reward, right? Risk reward, the strong risk management discipline that I'm always trying to emphasize at the end of every morning meeting, because at the end of the day, it's risk management that saves you and keeps you in the business. It's reward maximization that makes you money, and it's understanding probability that lets the risk reward numbers actually play out, right? So we have to just be constantly focused on that and constantly focused on the risk management, because as much as we can do all of this probability analysis day in, day out, it's probability, right? And there are no 100%s. There are no 100%s. There's always that situation where you get struck by lightning or whatever, and you want to make sure that if you're getting struck by lightning that you're, I don't know, touching some rubber or something. All right. On that note, I'll end the meeting, and I'll switch to see if there's any questions that any of you guys have. Cool. So I'm not seeing any questions in the VTF. What's Dave's chart here? Just the pairs trade chart of the dynamic. Oh, IWM and the Qs here. This is a great looking chart that Dave provided, and it's gross. It's gross, and it made new lows today. Thanks, Dave. It's pretty crazy, that downtrend, because it should be mean reverting, right? It should be mean reverting, and it looked like we were seeing some of that in August till that high, and at one point there at the beginning of June, and we're not getting any mean reversion on that spread between the Qs and the IWM. Robert asking me my plan for WeWork. I just have a small position that I'm holding to zero, and I trade around it a little bit. There's a really good probability that this thing's a zero at this point. So far, no announcement for it, though. Dave saying I was actually thinking that the Gem interview alluded to this, where the SPX holds flat, but specific areas go in different directions. Dispersion. Thanks, Bill. That's the word I was looking for. Dispersion. At some point, I'd love to hear you talk in detail about how you identify short sellers in the tape. It doesn't have to be today. Sure, I'm happy to do that. I don't suppose anybody has anything that's moving after hours that's circuit broken. It has to be circuit broken, Dave. That's the first thing. It has to be circuit broken triggered, which means it has to be down 10% today or be down 10% yesterday, and it's still circuit broken, because that's when short sellers can't hit the bid. But the best way to analyze that would be if we actually had a stock that was moving and is circuit broken and it's moving after hours, and we could try to look at the price action. Really would be the best way to do it, and I could do it with a screen share. I could try to do it in real time at some point during market hours also. It's better in an afternoon meeting, but it's harder to find something that's moving in an afternoon meeting. Anything else, Kang? I rambled enough, so we were able to have a decently long meeting despite there being almost no questions. So if no one else has anything, I'm happy to wrap it up for today. Going once, going twice, sold. All right. Have a great evening, everybody. I'll see you all tomorrow, where we will analyze the gap and all of that fun stuff and figure out what we want to do to try to make some money. See you then.